Okay, Fabrice, FSD Pharma, this company recently public. It's been setting volume records on the Canadian Securities Exchange. So why so much enthusiasm for this company?
I think there's a number of reasons for it, and I share that enthusiasm, by the way. I think, first of all, it looks a lot like an early version of Canopy. If you have a long memory, you'll remember that Canopy used to be called Tweed, and I was an investor very early in Tweed. I was an investor before it went public. And at the time, we only had basically the facility in Smith Falls that had been a Hershey chocolate, food grade facility, and basically an idea. At the time, it was hard to raise money for marijuana because a few short years ago, people just hadn't captured the imagination of the investing public. FSD Pharma has a food grade facility in Cobourg, Ontario, which was owned by Kraft. So, that food grade label is important because it means less capex to get it up to the standards required by Health Canada for marijuana. It also obviously has water, it has gas, it has rail, it's close to major markets. So I think people are seeing a kind of a parallel between sort of Tweed 1.0 and this company. And I think that's part of the enthusiasm for it. The difference, of course, is that this one only has a market cap of about, 150 million, whereas Canopy is now at 10 billion.
So FSD Pharma is a little bit different from other companies in that they are producing hydroponically and they want to be the largest hydroponic cannabis producer in the world. Is that significant?
It's very significant. I'm not a recreational pot user myself. I do use CBD for sleep, and it works like a charm, but I don't know much about the recreational market. However, I have learned recently that true users of marijuana, the recreational guys who buy the quarter pound, half pound a month, the kind of client that every LP dreams of having thousands of, they don't like stuff that's grown in greenhouses. They don't like the strength of it, and they find that you get inured to it, and you have to smoke more and more of it. Whereas hydroponic is considered, the gold standard for marijuana, and particularly for recreational users. So hydroponic is the way to go. I've got bad news for people who are, invested in just those producers who are going to be only greenhouses. It's going to be tough for them. So that's very significant. They have an enormous amount of square footage in their plant, and they also own a significant chunk of another one in Quebec called Cannara, which is still not going public. I figure the public value of that stake will be $20 million. So, you talk about 150 million market cap. They also have $50 million in cash, $20 million, call it, of Cannara shares. And they also own a little piece of a smaller company in Alberta that has an eye on becoming a big distributor in those provinces where a private distribution will be allowed. So there's a lot of hidden assets here on a $150 million market cap. And to get back to your first question, I think that's another reason, beyond the whole similarities to Tweed, that investors are very anxious to get involved in this name.
So having said all that, FSD Pharma does seem like a bit of a late-stage entrant to the cannabis game. So all those assets and all the factors that you're talking about, is that enough for them to catch up to the bigger players? Is that enough for them to differentiate themselves?
Well, that's a good question. They do have to catch up in the sense that the bigger players have made a lot of acquisitions. Okay, we all know that Canopy, it was called Tweed, but now it's Metrum, Tweed, a whole bunch of names that used to be public are now under that Canopy, no pun intended. Aurora has been very active on acquisitions as well. But I have to question some of the acquisitions. I mean, some of them are just done for the sake of doing something. When your market cap is much bigger than it should be, and you know it, you're smart to make acquisitions using your shares, of course, because they're overvalued, so you can get a lot more on your balance sheet, and that helps you justify your valuation. I don't think this company, FSD Pharma, has to justify its valuation. I mean, to me, it looks cheap. As I said, it has 50 million in cash, probably 30 million in assets that you don't really realize the true value of on the balance sheet. And the market cap is 150, 160. Now, let me do a little arithmetic for you so you can appreciate how attractive the valuation is. And I will grant you that they are behind in terms of the management. They don't have the the depth of management than the bigger players. They haven't made the acquisitions, but let me walk you through the math here. People love Canopy and Aurora and Aphria because they've done nothing but double ever since they went public. They started at whatever valuation. I think Tweed was maybe a couple $100 million. It went to 400, 800, 1.6 billion, so on and so forth, to the point where it got to 10 billion. Investors have been treated to an incredible ride, this constantly doubling stock price. But at $10 billion, for it to double again, it needs to attract 10 billion of new money. I don't think that's going to happen. There's lots of interest in this space, but to find 10 billion of new money today, that's tough. I think Aurora's at a 5 billion market cap. Again, to get another double out of it, you need $5 billion. Don't think that's going to happen. For this company to double in price, it only needs to attract about 150, 160 million new dollars. And that's not that difficult. I mean, if you own Canopy and you've done great, or Aurora, or Aphria, and you're wondering, what should I do? I have an idea for you. Sell some of that and buy some of FSD Pharma, because the leverage you have, you sell 1,000 shares of Canopy or 500 shares of Aphria, whatever the number is, and you buy shares in this at 15 or 20 cents, you're going to get a ton of shares that have the potential to do what these other bigger names have done. So I find it interesting for that reason. I'm sure that a lot of people are exiting or taking some profit on their bigger names that have done well and are getting into the smaller ones such as this one. So I think that's going to continue because the valuation, relatively speaking, is very compelling.
So Fabrice, FSD Pharma has a deal with Cannabis Wheat, and that's a company that you have been critical of in the past on capital ideas. So Cannabis Wheat is going to take about half of their production. Is that a significant maneuver by FSD?
It is, for a couple of reasons. And you're right, I was critical of Cannabis Wheat for a couple of things. Number one, the deal they did, I felt, was just not fair to the small shareholder, the small investor. And two, the model to me is I'd rather be on the receiving end of what they do than on the giving end. So I like this because FSD Pharma is on the receiving end of basically a royalty agreement that gives Cannabis Wheaton 50% of the output in return for funding the entire amount of that square footage that they've agreed to. So why that's interesting in my mind is that if you have some doubts about the commodity price risk that you're taking as an investor in cannabis, which is a commodity play, it just is. I mean, there's some value-added things around extraction and products, but really at the end of the day, you're taking commodity price risk. And the fact of the matter is, if you look at U.S. wholesale marijuana prices, the trend is down. It's becoming a commodity like anything else. So the low-cost producer is going to be the winner if he's producing quality. What I like about this deal is it gives the company some upside to the first stage of development, but it also kind of hedges it, because if it doesn't work out, they didn't have to pay for it. If the prices aren't there, or for whatever reason it takes longer for marijuana sales to ramp up, this company doesn't take the risk. It's all borne by Cannabis Wheaton. I like that as a built-in hedge. Now, having said that, if things do work out, they still have a lot of space in that facility to start doing their own, development, investing their own pile of cash into preparing and setting up the facility for production. So I do like that because it provides a hedge, and it also gives you upside and buys you time to understand the market. So I think that's a very prudent thing to do.
FSD Pharma has about $50 million in cash, as you mentioned. So do you see them being acquisitive in terms of trying to reach their goals? Or ultimately, you mentioned some of the other bigger players, they've grown through acquisition. Do you see a bigger cannabis company looking at them and saying, we like what you have, and they get taken out eventually?
I see both. And I think what the company is going to do is make strategic acquisitions, in case they have to go it alone, but also make strategic acquisitions that might look bigger attractive to a bigger fish. I can tell you this, I mentioned earlier in this interview that hydroponic is the way to go. And I think the guys who are out there doing, the hothouse growing, the greenhouse approach, they're going to realize, boy, we better get some hydroponic. And you've got a facility here that's going to be, they're already starting to grow in there. In 6 months, a year, they're going to have some big fat plants in there. And if I'm right and the market isn't drawn, if the end user isn't drawn to the greenhouse product and really does want that hydroponic, I think that this company makes a very, very attractive acquisition target for a bigger player.
Let's look at the capital structure. When you look up FSD Pharma, it says subordinate voting share. Is that a red flag? Is it significant? And second to that question would be, what's insider ownership look like?
I can't give you an exact figure on insider ownership, but it's appreciable. Let's put it that way. There's lots of it. Certainly, I think it's over 20%. As for the voting, non-voting shares, I mean, some commentators have made an issue about that. I don't have an issue with it. Does the little guy really care? You're trading the stock, you're a retail guy. This isn't an institutional story yet. They don't care about votes. They don't vote their proxies anyway. The voting shares don't have more economic benefits. They don't have more economic rights, in contrast to what some people have said. There's no difference economically. There's just the vote. And the reason that they did that, I think, is because they're anticipating a takeover offer at some point, or hoping for one, and they want to be able to control the destiny and make sure that there's a good price. There's a lot of shares outstanding on this company, 1.3 billion, which, I'll be honest, when I first saw that, I was a little leery. I thought, well, that's a lot of paper to soak up, but it also makes for a great trader. I mean, this thing trades millions and tens of millions of shares per day. It's the top traded stock on the CSC. It's in the CSC index. And so if you're a long-term buyer, fine, you can buy it. If you're a trader, you can trade hundreds of thousands of shares in minutes, as I said. So, I wouldn't worry about the multiple voting shares. The share count is high, but so far that's worked to the benefit of all parties. You can trade it. It's like water. So I wouldn't worry about that.
And lastly, Fabrice, you were early to the cannabis sector. You did well. And then in our recent conversations, you've been less bullish and a little more skeptical, but you're recommending FSD Pharma here and you've laid out the case. So wrap it up with a bow here. Why buy this stock?
Well, I'll start by saying that I'm an owner. I was an owner privately and I bought more in the market since it's gone public. I was skeptical because of valuations. I mean, is Canopy worth 10 billion? No way. Is Aurora worth 5 billion? Not a chance. Not even close. So this one's 160. It doesn't have, as I said earlier, everything that the bigger players have, but it's not far off, and it can get there, gradually over time. So it really boils down to a question of valuation at the end of the day. This is a $50 million bank account with hidden assets worth, call it 30 million, and a market cap of 160. Trades like water. I just like the odds of this one, say, giving you a big return relative to Canopy or Aphria or Aurora, which have already had their big runs. So is it late to the party? Yes, but if you believe in the bullish forecasts of most analysts for demand, it's not too late. There will be lots of demand for what they want, and there may be demand for the entire company at some point.